excited to introduce our esteemed speaker, Kevin Leinum, President of Insurance Services with Capstone, Inc. Kevin got started in long-term care insurance in 2003. He's a recognized expert in long-term care planning. His mission is to help educate and protect individuals, families, and businesses from the potentially significant costs of long-term care. As an independent agent, he represents the top carriers in the market and customizes a plan to meet the needs of his clients. He works with financial advisors, estate planners, employee benefit brokers, CPAs, and other long-term care specialists to protect his clients from this considerable risk. Kevin, with that, the floor is yours.
Thank you, and thank you for the opportunity to be on the call today, and thank you for everyone that's joining us. I know many of us on the call are in San Diego, so it's unusual weather today, right? The rain. But thank you for joining us. I appreciate that. Yeah, so I've been helping folks with long-term care insurance for actually about 15 years now. So it's a topic that's near and dear to my heart. My grandma had Alzheimer's up in Washington State, and she needed care. And so very personal story for me and my family and my mom and my two aunts. So, but yeah, thank you for joining the call today. There's a Q&A chat box if you have any specific questions about our conversation today or anything that's really just on your mind, long-term care insurance related, or experiences that you've had. Feel free to add that to the box. So yeah, thanks. So what I want to do before I start is kind of show you why I do what I do. My family is very important to me. My wife here on the screen, you should see the slide right here. Her name is Brianne. She and I have been married for 20 years as of this past November. So I have 3 boys. On the left is Micah, in the middle is Jasper, and on the right is Crosby. Picture's about a year old, but this is my family. So I just want you to know that my family's why I do what I do. And so let's get started. So the outline of topics today are what is long-term care insurance, or long-term care, what is the need for it? Why is the need for it growing? What are the options to protect yourself? What to look for in a good long-term care insurance plan? And why is it advantageous to get long-term care insurance sooner than later? So this slide presentation will be available if you'd like afterwards. My email and contact information will be on the last slide. So if you'd like to get this, I'm happy to provide that for you. All righty. So what is long-term care? Long-term care includes a wide range of services provided to people who have lost the ability to care for themselves. The loss can be caused by medical reasons due to an accident, chronic illness, cognitive impairment, or in many cases, simply a result of the aging process. So I know there's probably a lot of different scenarios of people that are on the call today. Some of you maybe are looking into long-term care insurance, possibly for yourself or a parent, or maybe taking care of a parent, or in some cases, maybe writing checks for one's parent's care. There's a lot of different possibilities of folks on the call today on why you're here, but we're just thankful for you being on the call today. And so long-term care services include in-home care, assisted living facility care, nursing home care, and adult daycare. So there's a possibility that maybe those on the call that have received had experiences maybe with your parents or family members who have needed care or currently needing care. It's really, really hard. So it's not easy. It's very emotional. If you've ever been a caregiver, it's extremely tiring to be a caregiver, especially for a long period of time. So preaching to the choir, but it's not easy. So for those that are or have been, congratulations. You've done more than most of us have. So it's admirable, but it is very, very difficult. So this is the avenues to which long-term care falls. Again, if you guys have any questions about any of these things, feel free to add them to the chat box. We can answer those at the end. Why is long-term care in the national spotlight? So the baby boomer generation, of course, is getting older, living longer due to medical advancements, and in many cases, women are working outside the home and families are more spread out, and it's not as conducive to take care of our family members as it may have been in the past. Obviously, things are very expensive nationwide as far as the cost of living. And so most families do have, both spouses that are working. And so it's not as easy to take care of, parents or one another. Long-term care costs are rising. An average of 5% per year is expected, and to double in the cost of care to double in 15 years. So if anybody on the calls today knows the cost of care or are writing checks for their parents' care or at one point may have, the cost of care is exorbitant. So the thought of long-term care insurance is the topic of today's call could be of interest to you, and just checking out what's available and potentially extending a safety net for you and peace of mind for the future for many reasons. Those on the call may have kids, may not. And that's one of the reasons why people consider long-term care insurance is kind of to take that pressure off the family. So this is a pretty staggering slide right here. How much will it cost? Personal companion and homemaker services. Average cost is $35 to $40 per hour. Now, those of us that are in San Diego County, I did provide some statistics local to San Diego, but also some national averages. Obviously, the cost is much different in San Diego County versus Imperial County or Riverside or Orange County. So it just kind of depends for that particular county. Usually it requires a 4-hour minimum. Obviously, driving time and things are taken into consideration. So it's hard to find someone that's just going to come for an hour or 2 hours. So please be mindful of that cost per day, per month averages. Assisted living facility can be as high as $8,200 per month. I was looking up, I think it was in New Hampshire or Connecticut. It was that level, but it's also important to note that there not only is a base cost for assisted living, but there's also a level of care cost. So each assisted living community has, typically between 4 and 6 different level of care costs based upon what the individual's needs are. So you're talking about medication management, prompting to take showers, mobility to bring to the dining room. All sorts of factors come into play as far as the level of care costs. So, in San Diego County, there's assisted livings that are $5,000, $6,000, $7,000 per month. But then on top of that, there's a level of care cost, level 1, at minimum $300 additional per month, up to level 4 or 6, and an additional $1,800 to $2,600 a month. So it is staggering the cost, and it's very important to plan for that and anticipate what the cost could be, 10, 15, 20 years from now. So I know on the call, there's variant ages. There might be folks on the call that are in their 40s all the way up to their 80s, typically. And so national average of assisted living is $5,850 per month. Skilled nursing facilities can vary from city and state, anywhere from $261 to over $687 per day. We'll get into more specifics about Medicare and how that works in conjunction with skilled nursing facilities and those costs. Current San Diego average in a skilled nursing facility, a private room, is $515 per day. And a semi-private shared room is $391 per day. So again, the slides would be available if you'd like. I can provide those with your email at the end, or you can give me a call and I can get that for you. How much will it cost? Long-term care costs are rising. Many in San Diego are paying $80,000 plus per year for long-term care. So you've had experiences with a spouse, a sibling, a parent, a grandparent. These costs are real. And so my goal today is to share with you about your options on how you can mitigate some of these costs and provide you that peace of mind for the future. Assessing the risk. Long-term care is not just for older adults. In fact, 40% of Americans currently receiving long-term care are between the ages of 18 and 64. In my experience within that demographic, it's typically due to unexpected accidents that could result from an injury, you know, temporary care in the home. I find that a lot of people think that, you know, if I need care, it's not going to be until I'm 90 years old from a stroke or from Alzheimer's. But when in all reality, it can happen at younger ages, you know, car accidents, you can have falls. I've had clients that have, you know, fallen off the roof or fallen down the stairs and injured or broke their back and needed care for a period of time. So it doesn't have to be when you're 90 years old. Growing older increases your chance of needing care. Center for Medicare and Medicaid Services, CMS, 60% of who reach the age of 65 will need long-term care at some point in their lives. So long-term care defined as care needed for more than 90 days. You know, if you break your leg and you need, you know, you have a cast on for a month or two, it probably is not going to be considered long-term care. It has to be determined that you'll need care for greater than 90 days. Okay, what are the options to protect yourself? You've got Medicare, health insurance. Those on the phone or on the Zoom call today that are over the age of 65 or under the age of 65 that have been disabled for greater than 2 years have access to Medicare. So also Medi-Cal, you can self-insure the risk if you're comfortable paying for those type of costs. And then long-term care insurance is the fourth option. So what about Medicare? Find that a lot of people call me and say that they have Medicare and they assume that they have you know, an avenue to cover their long-term care needs. Well, that's not necessarily the case. You must have a hospital stay of at least 3 consecutive days, not counting the day of discharge. Be admitted to a nursing home within 30 days of discharge for the same illness. Be receiving daily skilled care only. Be certified by a medical professional that you need skilled rehabilitative care. So in most cases, long-term care, Medicare would only cover skilled nursing facility care in most cases. If you qualify for Medicare, Medicare will pay days 1 through 20 at 100% of the cost, providing you're receiving daily skilled care. Days 21 through 100, you pay the first $209.50 per day, and Medicare pays the difference. After day 100, Medicare pays nothing. So Medicare only covers just under 10% of long-term care costs nationwide. So that's the value that long-term care insurance can award you. What about Medicaid or outside of California or Medi-Cal? It's only a joint federal and state program that helps to pay medical costs for people with low incomes and limited resources. And typically that would be in a long-term skilled nursing facility. So not an ideal scenario. You can self-insure long-term care. Most people would prefer not to use the money that they've worked hard the past 30 years to accumulate, to gamble on the risk of needing long-term care. 2 reasons: we save money, maintain lifestyle in retirement, enjoy the money that we've saved to travel and, you know, spoil grandchildren, etc. Things that bring us joy. And why have to use that money for, you know, our long-term care needs? The second is emergencies. Long-term care is really the last uninsured risk that one would face. We obviously we have car insurance, we have homeowners insurance, we have typically health insurance under 65, but the greatest threat is long-term care, especially when you're talking about numbers like, you know, $70,000 to $100,000 a year. So it's those are real numbers. Depending on what stage of life you're in, some could take a little bit of your interest that you have generating on your nest egg to help fund long-term care insurance to make sure that the whole nest egg is protected. So why not use a little bit of your RMD, required minimum distribution, to help pay for your long-term care insurance instead of letting all of your assets be your protection should you or a loved one need care. So in other words, taking a few of the golden eggs the hen is laying to protect the whole hen from going to the chopping block if you were to need care. So I think that's a pretty vivid picture of how this could look. And some of you on the phone have financial advisors. Some of you maybe have bridged the conversation of long-term care insurance in the past. And, obviously this is a very emotional consideration and something that is important to think about. But the fact that you're on the call today is encouraging, because obviously you're thinking about the future and you're planning, or maybe there's those that are on the call today that already do have long-term care insurance. And if you need a no cost evaluation, feel free to reach out. I'm happy to look at that. And if you have questions specifically to your policies, I'm here to help out with that as well. The different types of long-term care insurance. So typically there's three types. There's traditional long-term care insurance, and that's pretty much a plan is designed for you based upon really what you're comfortable paying on a monthly or an annual basis. And that's a similar type of plan as like a term life insurance or homeowners insurance or car insurance, and that you pay as you go. And it serves that purpose. If you were to need care, it will pay for your care needs. The additional options are more of like hybrid plans, different terminology, hybrid plans or linked plans, where it's life insurance with long-term care insurance, which is a nice feature. Also, the annuity with long-term care insurance. It's all subject to your age and when you're looking into this. I'll go into life insurance with long-term care insurance. It's considered a hybrid plan where it combines long-term care benefits with life insurance, offering coverage for both living and death-related expenses while helping to cover long-term care costs. And so if you never use it, there's a death benefit on the plan that could pay out to your beneficiary or your trust. Should you not use it, it also can be used while you're living for your long-term care needs. So this is a nice consideration. Another option is annuity with long-term care insurance. You would invest a lump sum or pay premiums that grow with the annuity if you need long-term care. A portion of the annuity value is used to cover costs. If no long-term care is needed, then annuity provides retirement income, or the accumulated value can be used by you or your beneficiaries. So in that scenario, maybe you use a lump sum of your money, say $100,000 or $150,000, and then you would be able to access greater amounts of money on top of your money. If you're single, if you're married, both of you can be on the same policy, which can be helpful and give you greater leverage on your own money, the money that you would go to first. So I guess I would pose this question: like, if you don't currently have long-term care insurance, like, which account would you use first to pay for your long-term care needs? So that's really kind of a self-reflection of would you use your 401k? Would you use retirements? Would you sell a piece of property? What would you go to first as your first way to pay for your care? So just think about that. But this is an option that will give you greater leverage on your own money, the money that you would go to first to pay for your care. Long-term care insurance offers asset protection, money to pay for your long-term care expenses, so you don't have to spend down your hard-earned assets on your care, whether that's care in your home, care in an assisted living facility, memory care community, adult daycare for more social interaction, where you still live at home, but you can go into like an adult daycare 6 to 8 hours per day. It protects your family, avoid impoverishing your spouse or becoming a physical or financial burden on your children or other family members. I get this a lot. I don't want to be a burden on my family. I don't want to be a burden on my kids. Sometimes I hear them say, I think they're joking, but they say, my daughter or son was a burden on me. And I say, okay, well, I think in most experiences, people aren't going to want to be a burden on their family, which there's validity to. It's nice when you have that safety net, that peace of mind with a long-term care insurance policy, so that when your siblings or your children come to visit you, or your spouse comes to visit you, they can actually enjoy that time. And it doesn't have to be, work. And, take care of things, but they can actually interact and have good conversation with their loved one. Quality of care helps maintain independence and choice. So most people, if they needed care, would prefer to stay at home. Fortunately, these long-term care insurance policies can be used not only in a community, but also at home, which would be ideal. Sometimes there's restraints when you're talking about stairs. If you're a fall risk, maybe it's really not conducive to stay at home. Maybe if one spouse passes away and the home is becoming too difficult to manage for their surviving spouse, then maybe at that point, move to a one-story home or move into a senior living community. A lot of different scenarios if there's not a bedroom on the first floor or whatnot. Also financial safety, peace of mind for the future. And like I said earlier, you save 30 to 40 years, use that money for the things that you want to do, whether it's traveling or your different activities you like to do. And it's nice not having to put so many hundreds of $1,000s aside just in case, if you were to need care. You could actually spend your money a little bit more comfortably knowing that the long-term care insurance would be there available for you. So what to look for in a good long-term care insurance policy? So an insurance company that's experienced long-term care that is rated A or better, so that that there's financial stability within that company, different options in care with access to home care, community care, assisted living, and skilled nursing. Appropriate coverage for your financial needs. Meet with a professional if you like. I can meet with you. We can meet over Zoom call or over the phone or in person, depending on where you live. And like I said, some people on the call may already have long-term care insurance. And if you need a no-cost review, I'm happy to help you with that. And if you don't have long-term care insurance and you're thinking about it, just feel free to jot down my name and number at the end, and I'm happy to have a conversation with you and see if it's one of these options is appropriate for you. That's what I'm here for. So the sooner the better. So age is in your favor. As I alluded to earlier, there might be people on the call today. They're in their 40s, 50s, 60s, 70s, 80s. Premiums, when you don't have a policy, increase every year you wait. The sooner you plan, the lower your premiums will be, depending on the type of plan, whether it's a traditional long-term care insurance, whether it's a life insurance with long-term care insurance, or an annuity with long-term care insurance. Really, the earlier you look into this, the more bang for your buck that you're going to get, the better your plan will be. In most cases, you must health qualify. No matter how much you're willing to pay, a change in your health can make it impossible to obtain coverage. If you had a stroke, that you're not going to be insurable. If you've been diagnosed with Parkinson's or Alzheimer's or ALS, or severe rheumatoid arthritis or lupus or severe autoimmune disorder, you're probably not going to be insurable. So there's validity, to look into the coverage as early as you can, so that you can obtain coverage. Premiums can range depending on your health situation. Plan now while you're healthy before anything changes. Sometimes there's instances where there's one spouse that they can't get coverage because of a specific health ailment. And it's all that more important that the healthy spouse get a policy, because we don't know what the future looks like. We don't have a crystal ball to know what the cost might be for the spouse who's a little less healthy, and those costs that could incur. And so you don't want to impoverish the healthier spouse. Tax advantages: qualified long-term care insurance may be tax deductible. You'd want to check with your tax advisor to see if you qualify. Typically, you'd have to have long-term care insurance costs, premiums, and health costs exceed 7.5% of your annual income to be considered a qualified expense. And so that was kind of an overview. As I mentioned earlier, you might have more specific questions, specifically regarding your health, the type of plan that you might be interested in. Specifically, I can provide you some illustrations, some quotes on those different options. And it's also important to communicate that if your birthday is approaching, you'd want to look into this sooner than later, because the premiums in most cases are based upon your current age. And so depending on what your age is, the earlier you look into this better, and it may be advantageous to look into it soon, because if your birthday is approaching. But also the other factors is we don't really know what's coming down the pipeline with your health, right? So sometimes you get a new diagnosis, and then someone comes to me and says, "Okay, Kevin, I'm now ready to look into long-term care insurance." And I say, "Well, Robert, has anything changed in your health in the last 6 months?" He said, "Well, actually, I had a TIA, a mini stroke." And I then let them know that there's now a waiting period based upon that. The insurance companies like to make sure there's a stability period based upon recent health diagnoses or new medications that were added, such as medications for blood pressure, depression, diabetes, anxiety. They want to make sure that the medications are doing the trick. So you just never know, what might be coming down the pipeline. Things can change within your health, and there's also preferred health discounts. So if you're in a spot where you really don't have a whole lot of health concerns, from the vantage point of the insurance company, then you could get a preferred health discount, which could be anywhere from 5 to 15% discount above and beyond somebody that's not quite as healthy. If you're in a committed relationship or married or in a domestic partnership, then you could also take advantage of a spousal discount, anywhere from additional 5 to 15% per person, moving forward. And if one of the spouses passed away, that discount would not be taken away. So there's validity in looking at this as well. So I think I've kind of gone through things about what the plans cover, what long-term care is. Long-term care defined as care needed for more than 90 days. There's 6 activities of daily living: eating, bathing, dressing, transferring, toileting, and continence. And if you're unable to do 2 of the 6 activities of daily living for greater than 90 days, then that's what's deemed a long-term care event. Or so I think we'll go to the end here now. So this is just an opportunity for Q&A and questions. We can stay on. We've got some time here to give you the freedom to ask any specific questions that you might have. There's a chat box down below, so I'll let you take it away.
Kevin, thank you so much. It's a lot of great information on long-term care. Just as a reminder, there is the Q&A at the bottom of your screen. Use that if you have a question. We'll be here to answer any questions that you might have relating to long-term care insurance. And also, you may use the chat. If you feel more comfortable using the chat, we'll be able to answer your questions in that. Okay, so Kevin, why don't we jump into the questions? First question came in early, but the question is, what does long-term care insurance cover that would not be covered by Medicare Advantage? Essentially, why would we need this coverage?
So Medicare, so where health insurance ends, long-term care begins. So Medicare Advantage plans cover hospitalizations, outpatient surgeries, doctor visit costs. But when you're talking about actual care, custodial care, it's not going to cover like in-home care, typically. So when you're talking about the cost of $35 to $40 per hour, Medicare is not going to cover that. So that's a great question. I get that a lot. If I have Medicare Advantage, why wouldn't it be covered? But it just isn't. Where health insurance ends, long-term care begins.
Yeah, that's a great point. Thank you, Kevin. Another question: when we need the insurance after paying the premiums, what do we need to do to keep from being denied help from the insurance company?
So if you meet the criteria of the inability to do 2 of the 6 activities of daily living for greater than 90 days, or if you have substantial cognitive and severe cognitive impairment, such as dementia or Alzheimer's, then that's how you would able to effectively file a claim against the long-term care insurance policy. I hope I answered that question right. Is if you need to re-ask, I can try to word it a different way.
Great, thank you. Let's see. I have a long-term care policy that was issued in 2004. In fact, it's paid up through 2024. Concerned it might not be as good because of the age of the policy. Are there riders for existing policies?
Typically not. So some of the policies of yesteryear, you were able to have them paid up, which is a nice feature. But usually on that policy, it was written, 15, 20 years ago, they're not going to let you add additional coverage to it. So if you feel as though that your plan is not sufficient for your needs, or if you're concerned about that, I can help you with a standalone additional policy based upon your current age and your current health.
So does that address the inflation concerns, rising costs? Is that kind of covered within that?
So each policy is written uniquely. So my encouragement would be to look at your policy, or if you need some guidance, I'm happy to look at your policy and let you know if there's any shortcomings on that. You could always reach out to your insurance company and ask them if there's an opportunity to add coverage at this stage in the game, but it's not likely. But you can try, and but if you need me to look at the policy, I'm happy to do so. And then if there's a need, if you feel like there's a deficiency on what you have, then I can help you get you a quote for a supplemental policy.
Excellent. Okay, Kevin, could you also put your email in the chat? Maybe I don't see your email address on this last slide. Several attendees have asked for copies of the slides and some maybe some other information, additional information about long-term care, and maybe they can email you directly.
Yeah, please feel free to email me directly just so that I can send you over the slides. I might not be able to get your emails off of here, so yeah, feel free to send me an email.
Okay. Next question is there a threshold, an amount of retirement savings over which long-term care is not necessary or recommended?
Really, it just depends upon if you're comfortable using your assets. So, I mean, I have people that have $5 million that decide not to purchase long-term care insurance. I think the sweet spot is if your asset levels are anywhere between, say, 200,000 and 1.5 million, it's probably a good thing to have. If you have $2 million and you understand that the cost of care now is, $6,000 to $8,000 a month, and 15 years from now, it might be, $14,000 to $18,000 a month, and you times that by a certain number of years, and you understand your lifestyle and what you need, and if you like to travel and your expenses, or if you paid off your home. Obviously, if you paid off your home, or there's less costs on a monthly basis. So everyone's different situation scenario is a little bit different. Like if you have $2 million, but you have a threshold of spending more than you make, or right at that level, I think that's just a personal decision. But I mean, if you have $10 million or $6 million or $4 million, you're going to be fine in most cases, unless you need care for 30 years. But most people need care if 3 to 5 years, maybe 7 years or so.
Excellent. Do they need a medical report from a physician?
Correct. Yeah. So the three things that could occur typically with traditional long-term care insurance would be a signed HIPAA authorization and release form to get your medical records, and also a potential face-to-face assessment. Typically, if you're over the age of 65, or usually under 65, it tends to be just a phone interview. But if there's anything that's concerning about medical records and they needed to do a face-to-face, to make an evaluation, or to check balance or gait issues with walking, and just different things like that. Like they have the freedom to dig. So.
Question about the premium. What might be a monthly cost for long-term care insurance for a 62-year-old woman?
So it would, if we're talking about traditional long-term care insurance, I mean, at 62, anticipate, you know, $180 a month to $350 a month, depending on the benefits. So it's a wide range. I mean, you're talking about the policy paying a certain amount of benefit per month or per day, a daily benefit or monthly benefit, as well as a certain period of time and duration. So that could be 3 years or 5 years or 7 years. So, um, that would be kind of a range specifically, but also factors involved. It would be your health. Number one, if you're insurable, because if you've had recent health diagnoses, or if you have recommended surgeries, or if you have bone on bone in your knee, and maybe you're getting cortisone injections, which mask the pain. Insurance companies are not fond of bone on bone in their knee with injections. So the surgery would need to be taken place, or if there's been a recommended surgery, it needs to take place before the insurance companies will insure you. So hopefully that's kind of a range for you.
Yeah, I'm sure there are a lot of factors that go into determining your premium. Another question, is it a good idea to use long-term care from life insurance and annuities?
There's value in it. Yes. So typically to qualify for life insurance, you have to qualify for mortality. What's the likelihood that someone may pass away, right? And with long-term care, it's based upon morbidity. What's the likelihood that a person could need care? Well, the value of a life insurance with long-term care insurance policy is that it's not going to be a scenario like car insurance or homeowners insurance, where the catchphrase is, if I don't use it, I'm going to lose it, right? You guys have heard that term. With a life insurance, with long-term care insurance, or for those that purchase an annuity with long-term care insurance, it's not going to be that way, right? You're not going to lose it. Like if you never use it, a percentage of the money, a good percentage of the money is going to go back to your beneficiaries. So there is value in securing a life insurance with long-term care insurance if you can health qualify, or at minimum an annuity with long-term care insurance.
Excellent. Another question in regards to having diabetes or pre-existing. If you have diabetes, is long-term care cost prohibitive?
So as long as it's controlled, as long as you haven't had a new medication added in the last 3 months, typically there likes to be a stability period with your A1C level readings. Also, if you're type 1 diabetic or type 2 diabetic that requires insulin, it's harder to get long-term care insurance, traditional long-term care insurance, if you have insulin. So if you're on oral medications like metformin, then it's possible. And I think it just takes talking to a professional like myself, and we can kind of hash out the details and see if it makes sense for you. And based upon your age, any additional health, any comorbids, if the diabetes is causing any type of neuropathy in your feet, or tingling in your hands, or any type of retinopathy with your eyes, with vision, then that would be concerning as well. So it really just depends upon the stage of the diabetes.
And are there any other options if long-term care is not an option? What else should they consider?
There is an option, but not in California. It's called short-term care. So if you happen to not reside in the state of California, that could be a consideration. But if your diabetes isn't too far along, and your A1C level isn't over like 7.5, you should be fine as long as it's controlled and there aren't any comorbids.
Is type 2 diabetes, is that a qualifier? Or
Qualifier meaning how
can you
you're able.
still qualify for long-term care if you have type 2 diabetes?
Yes, as long as it's controlled, no insulin, and you should be okay as long as there's a stability period and there aren't any concerns with your eyes and with your you know tingling in your hands or your feet.
So, and then a follow-up question was on Parkinson's. A spouse has Parkinson's. Will they be able to qualify for long-term care?
Unfortunately, no. But the party that just inquired about that question, as much as you'd want your spouse, loved one to have long-term care insurance, it's all that more important that you, if you can qualify, that you should get it, because knowing now that he or she's not qualified for long-term care insurance or insurable for long-term care insurance, the cost that we know can be exorbitant. So if you can get coverage, I would encourage you to do so.
Another question about rising costs. So does the insurance coverage increase in benefits as costs increase every year?
If you select a feature called the inflation protection, then yes, it will. It could keep up with the rising costs of care. There's different ways to structure the policies. If you structure with the inflation, or if you structure it at a higher daily or monthly amount without the inflation. So really just depends upon the structure.
Okay, question, how do you know if the insurance will be there when you need it? I've heard a lot of companies have stopped providing long-term care insurance, or the benefits have greatly changed over time with the cost of policy increasing and benefits decreasing.
Okay, so let me read that. There's a lot in there. So how do we know if the insurance will be there when you need it? So I think in one of my slides, I alluded to wanting to select a highly reputable A-rated company. As we know, in the world we live in, things can change, right? Like a company can be an A-rated, and then 20 years later, they could be a C+ rated. So you have to work with what you have at the time. You have to be very careful and mindful of that. In my experience, if a company was to go insolvent, such as in the state of California, in my experience, California will have a fund to pay for long-term care, as I've heard. Haven't seen it firsthand, but that's the exposure that I have. And so the next would be I've heard a lot of companies have stopped providing long-term care insurance, or benefits have changed. So yes, there have been some companies that have stopped offering long-term care insurance because the interest levels were so low for so long. Insurance companies are in the business to make money, right? That's what they do, just, brass tacks. And so now that the interest rates are higher, I anticipate some companies coming back into the space, but there are still some companies that I work with that never left the long-term care space. So there have been some increases on the policies that would have to be approved through the California Department of Insurance. The policies can be used, like say a policy's been purchased in California. One of the other questions I get is, what if I move to Arizona or Texas or Idaho? They can be used in other states as well. So that was just a kind of a side thought. But yeah, there are ways to mitigate some of the costs for the increases with benefit reduction. Not ideal, but you really want to be mindful of the company that you select on day one.
And what does that A rating imply? Financially profitable, good at providing coverage participants, or what does that rating signify?
So just so how does an A-rated company, basically all the financials, customer service is how companies are rated, make sure that claims are paid accordingly.
Okay. One question is regards to staying in your home. If you want to stay in your home for all nursing care, what type of policy would that be?
So if I want to stay in home for all nursing care, well, nursing care would be in a skilled nursing facility. If you want a policy that includes in-home care, then that would be the traditional long-term care policy, which is comprehensive. So if you were to purchase a traditional long-term care insurance policy, you could use it for in-home care. You could use it at assisted living facilities, memory care communities, long-term skilled nursing facilities. So I just think the terminology Yeah, it would be that. It would be a traditional long-term care insurance policy or one of the other two options that I alluded to, which was the life insurance with long-term care insurance or an annuity with long-term care insurance.
Mhm.
Yeah, feel free to give me a call and we can talk more specifics about that for
Yeah.
yourself.
Perfect, thank you. Another question is regards to workers' comp. Uh, my husband is currently dealing with workers' comp case because he got hurt at work. Can we still apply for long-term care?
So depending on his ailment, probably not. So typically insurance companies want to make sure all workers' comp or surgeries have been completed um, based, before they're willing to insure an individual. So say he had a fall, I'm reading the question here. Actually, I think it went away. But yeah, so yeah, probably not. Probably not. So if he has a knee injury or a back injury from a work incident, uh, if it's severe enough to go on workers' comp, and it's well documented in the notes, the long-term care insurance company will probably wait until it's completed. Now we know workers' comp can take years to finalize, so that might put him between a rock and a hard place. But again, feel free to give me a call and you can let me know his scenario and I can let you know if there's any wiggle room to try to get him a policy.
Okay. Another question, does long-term care insurance cover 100% of the cost of a facility or certain percentage, and the rest of the cost is still out of pocket?
Correct. Yeah. So when you meet with a professional like myself, we would design a plan based upon um, what is necessary for you, right? So if you come to me and you have $1.2 million in assets and you want a buffer, you want a safety net, you don't need a policy that'll pay out 8,000 a month. You just want a policy that'll pay out 4 or 5,000 a month. You can what I call co-insure part of the difference. So in some cases, I'll design plans that'll cover 2/3 of the cost of your care, or maybe 3/4 of the cost of your care. But it's really all relative to what you're willing to bring to the table, what percentage you're willing to pay. Some people want a Cadillac plan and they're willing to pay for it. And they say, you know what, I want a plan that's going to pay 100% or 90% of my care costs today, as well as 10 or 15 years from now. And they're gonna pay a pretty penny, full disclosure, but that's going to give them that confidence and that peace of mind and the ability that we talked earlier about not putting that pressure off family or kids or loved ones. um, the freedom of choice of care, including in-home care. But no, it might not cover that unless you want it to. But I have people right now who I helped with long-term care insurance, and their parent got a policy 25 years ago, and it's covering $4,000 a month for their care at an assisted living facility, and it's a huge help. So but it's really up to you. We would work on a plan that you're comfortable with.
Excellent. Follow-up question to the plan. Now, do you charge for that plan or do you receive a commission from the insurance company?
Correct. Yeah. No cost for my services to you. Free advice, free analysis, and I get paid through the insurance companies 100%.
Okay. Another question regarding whole life insurance with a long-term insurance rider. Is it easier, is whole life insurance with the rider, long-term care insurance rider, easier to do compared to directly purchasing a long-term insurance? Is whole life insurance with a long-term insurance rider have the same health qualifications as the regular long-term care insurance?
So it tends to be harder to qualify. I alluded earlier to the fact that you're going to need to qualify not only on mortality, what's the likelihood that you're going to be living to a certain age, as well as morbidity, what's the likelihood that at some point in your life you could need care. So they actually they underwrite you two different ways. So it's more challenging to get approved with that than a standard traditional long-term care insurance policy. But it's possible.
All right, and let's see. Question regarding dementia. My mom was diagnosed with early onset dementia. Since she now has a diagnosis of a cognitive impairment, will she no longer be eligible to get long-term care insurance?
Yes, she will no longer be able to purchase long-term care insurance.
Kevin, I just want to thank you for all this information that you were able to provide us with today on long-term care insurance. So many moving parts. Your presence has truly made a difference, and we appreciate you taking the time out of your busy day to join us this session. Until we meet again, wishing you continued success on your path to financial well-being. Have a great day, and thanks for joining us.